Can you feel the love tonight? Speaking of love, you're not loving that sound, is it? That voice of mine? Got a face for radio and a voice for print. So here we are checking in live. We'll do it live here on Wednesday, May 17th, 2023, 10:49 a.m. on the Swatch Watch, Central Standard Time here in the Fortress of Solitude Studios in the farm fields of Valparaiso, Indiana. Thanks for joining me on this fine Wednesday. They call it Hump Day. Do the Hump Day Hump. Come on and do the Hump Day Hump. I wanted to take a look at what's going on here. We got a little bit of action on the SPY. Look at that thing up and down today. Currently at 412.52. S&P 500 up 0.5%. Same with the Dow Jones. Same with NASDAQ and the Russ. Our friend Russell Simmons, he's up over 1.2%. Crude oil up 2.2%. That's good for all those oil stocks that I'm carrying around, walking around with bags of oil stocks. Let's check a look at the big board. And guess what, Brian? We got that new look going. My buddy Brian, he's like, hey, you know what? Probably look better if you went with the night mode. Like, hey, I didn't even know it's possible. I've always enjoyed the night mode better, but apparently the factory settings on this Robinhood is that night mode is when the market is closed. So I can go in there and change it whenever I want, and we've got it changed to the night mode, working on our night mode. Working on mysteries without any clues over here. What do we got on the board? We got these 82 puts on the Blackstone. They're under pressure, aren't they? Yeah. Oh, they're not. Hey, we'll take it. Thanks a lot, Blackstone. Currently cooperating up 3.5%, 83.28 trading at. Yesterday they closed it like under 81. So I was under pressure on those. And so we got some movements, we've got some things to look at and some trades to manage and maybe not manage, as well as let's look at the big board on the watch list over at finance.yahoo.com. Look at this. Elon Musk says laptop class needs to get off their moral high horse when it comes to remote work. I agree. If I'm running a business and I want you in the office, you're getting in the office. Oh, yeah. I did listen to about half of his interview yesterday. I've got it recorded, so I'll listen to the other half. But I like Elon. I mean, he's a character. He's kind of a kook, but he's a visionary. He's a little bit of a carnival barker, but so is Warren Buffett. I love him as well. So he says they got some new unveiling to do. So the guesses out there, the ideas from the talking heads is that he's going to come out with a new model on the Tesla, a lower priced model. So that'll be interesting. Almost has me interested in the Tesla. Hey, apparently his talk did well. They're up over $7 today, almost 4.5%. But on the big board, CVS currently still not cooperating with me. We want that to be over $70. Tyson Foods, we want that to be over 50, not cooperating either. Looking on down, a couple things stood out earlier when I was looking. Procter & Gamble was one of them. Johnson & Johnson the other. Also Pepsi. So I was looking at those three. So wait, is that four? What was the other one? Oh, it's Walmart. Walmart, Procter & Gamble, Johnson & Johnson, and Pepsi. The interesting part is all of those would be considered defensive plays in a potentially recessionary market coming up on us. But also, I've seen, or what I've been looking at and witnessing, is that the money, it seems to be returning to tech and considering those to be what? High, big market cap tech companies that are considered to be safe. Google is going to the moon. Microsoft has had a great run. AMD, I noticed, is going bananas again. So are those considered safe havens because earnings can still be growing there, whereas they might be, the market, meaning they might be believing that earnings is not going to be growing on companies like Walmart, Johnson & Johnson, PepsiCo, etc. But that doesn't mean I don't want to trade it. I still may want to trade these. So let's look at some of the action. Let's start with the Walmart. Hey, we got it up right there. Walmart. I was thinking about, and this is dangerous. It's dangerous on the dance floor because they report earnings tomorrow morning pre-market. But I was thinking, is there a move to be made with a credit spread, a very safe credit spread that can take advantage of the volatility? Yeah, of course, it's still a risk. But looking at what Target did, and I chickened out and I bailed on that Target trade. Let's pull it up real fast just to show you what went on. So last Friday afternoon, we put on the Target trade. We sold 5 puts for $2,550. And then on Monday, I like, oh no, I'm scared. I got all scared. So I bailed out and bought those closed for 21.25. So we ended up making $425 in 3 days. So I'll take that all day, every day, and twice on Sunday. But currently, Target is doing very well today at 160. Well, it's trying to go down a little bit. So around 161. So my 155 strikes would still be safe. But again, I was scared and I wanted to stuff the money into my pockets and not lose any of the money. But I thought, seeing what Walmart did, I mean, what Target did, it's probably safe to say that you shouldn't say those words because you're recording these and you never edit them. So we'll just say, I'm saying that it might be safe to say that Walmart is going to beat on their EPS, their revenue, well, maybe not revenue, but their earnings per share. They're going to beat. And then their outlook is going to be, well, it could be slow. But if they react the same way that Target did, then we should be in good shape. So if I did a put credit spread deep down in the money, is there any action to be had? Like, for instance, the 141, is it possible for Walmart to go from 149.15 down to 141 in 2 days? Of course, it's possible. But is it likely? Not according to this. This says it's only has about a 10% chance. So the delta's at a 10. So it basically says there's about a 10% chance that Walmart is going to drop to 141 or below. It could be blown out because of a terrible earnings report tomorrow morning. But I thought, let's just check it out. If we buy the 139, so it'd be $2 wide. It's only a 14-cent credit. 14-cent credit. Let's continue. And let's put 3 on it. Let's put 3 on that. Can we get 15? Probably not, it says. Just try for 15. $45 is a nice round number. Review the order. This is a put credit spread. It's $2 wide, 3 contracts, so that's $600 in collateral. Short trade. Let's just put it on the board and leave it up there for a little while, see what happens. In the meantime, let's look at PepsiCo. Let's look at Pepsi and see what we can do with the PepsiCo. We currently own 0.0 shares of Pepsi. Let's sell a put on it as well. Let's look at the short trade here. 2 days to expiration. Whoa. It drops off very quickly. And the spreads are a $2.50 wide per. Let's go out a week just to see if that changes to $1. It does not. It does not change to $1. Let's look down here because I was doing math. Boop, boop, boop. And what I came up with is that I would be interested in Pepsi at 185. 180 and the 5. 3 coins in a fountain, all of them seeking happiness. Let's see what this does. 14 credit again, but we got a $5 wide trade. So 228, carry the 1. So if we continue that, we put 2 on it. What can we get filled at? 18? 17? Got a medium chance of that. $34 on a $1,000. No, how many? 500. Yeah, it'd be $1,000 collateral. So $34 on $1,000 collateral on this put credit spread on PepsiCo on the Pepsi Cola. So we'll leave that filled. We filled it right there. So if we did the Fantasyland math, right? $34 divided by the 1,000 divided by 9 days out multiplied by 365. We got 137% return on investment, or in this case, return on collateral. Let's go to Johnson and the Johnson. See if there's a credit spread we'd be interested in. In fact, we already have one up. I don't think I did it on camera. Let's check on it. There it is. It's a 155/150 and it expires next Friday. We got 3 contracts on that. And what did we collect when we put it on? We put it on May 15th and we collected $123. Is there a trade on the Johnson and Johnson right now, a put credit spread that we'd be interested in? Is there a short play? Let's look at Johnson and Johnson. I would probably look at that. The 155 and the 150. I know it's not going to be a big credit, but it's only 2 days. 9 cents. Let's check on 3 of those. My wife says she's leaving for the car wash. Okay, sweetie pie. We have a meeting today, her and I. We've got a referral from an old neighbor. Their parents are thinking about selling their house, so we're going to swing by there and give them a analysis of the house, talk about time frame of when they want to sell it, all that good stuff. So that's at 1 p.m. It's currently 11 a.m. So we've got that going for us today. Okay, so Johnson & Johnson 155/150, the put credit spread, trying to bring in $33 with $1,500 collateral. So we'll leave that one on the board. Let's take a look at the Proctor and the gamble, because some of these are considered to be a gamble, and you got to roll your dice and take your chances. So Procter and Gamble, if we look at them over the last week, well, they went up. They were at 153, went all the way up to 156, and now they're back down. They're at 154.16. Let's take a look at them. Sell a put. What's the short look like? Short-term play. Looks at this 152.50. If you just go $2.50 wide, that might be interesting to me. Let's check this. If we buy it at 150, we'd be about a 10-cent credit. Is that possible? That says 15. That says 15 on the credit. Let's go 3 of those and just check on that 15-cent credit, $45. And we're only would be $750 collateral. There it is, $750. Let's put that on the board. See if Procter and Gamble tries to fill. We'll leave it up there as well. So there's a couple of short-term trades. All would be on stocks that I would be interested in owning. I got a new thought process that I'll be sharing in the next video as far as a big picture idea regarding dividend paying stocks, safe dividend paying stocks. Because, what if this market goes sideways for the next year or 10 years? I want those dividends. I want dividends. I want to be able to sell covered calls, cash secured puts, and create cash flow for income. So we'll talk about that in the next video. I want to set up some screeners to share, research stocks, come up with like a dividend score with a lot of different things involved, fun things like yield, 5-year dividend growth, EPS growth, revenue growth, return on equity, return on capital, all the good stuff that would show us which companies are best positioned to continue to pay us those dollar bills. So thanks for tuning in here live it's likely going to be the last video today because after our listing appointment at 1 p.m., we're going to drive out to Chesterton, which is the town to the north. We have a tenant, a long-time tenant that moved out of one of our duplexes, a sweetheart of a gal, and she's moving in with her boyfriend before they buy a house. And they moved to LaPorte, which is even further out. So we'll check on that unit, decide whether we're going to give her deposit back or not. Knowing her, we are, because it's probably in wonderful shape, but got that going on. And then by that time, market's going to be closed. So probably see you again on tomorrow. Or you know what? I could do that dividend screener after hours. So we'll check on that. In the meantime, like, subscribe, comment, share it with a lovable friend, and I'll see you in the next video.